Matt Schulz is with us, Chief Industry Analyst of LendingTree. Matt, thanks for being with us. We look at these names in the payment space. We see PayPal on the move beautifully to the upside at a new high, right? So it has 1 month up almost 40% year to date. It's been a winner and at new highs. What do you think about in this payment space? I mean, are some better positioned than others?
Yeah, I do think some are better positioned than others. PayPal has had a really good time of it with especially, it means so much online shopping now that everybody's just stuck inside and not going to the stores. Whereas you look at some place like Square, who may be a little more dependent on small businesses, medium-sized businesses, where you're actually at the point of sale, at the checkout counter, and Square is reliant on those sorts of businesses that either are closed right now or under kind of like diminished capacity and may end up struggling to come back once all this is over.
You know, Citigroup, for example, raised Square target up to $66. Bank of America put it at $72. They all have buy ratings or market performs. But, you know, the idea on Square, at least, was that they did very well with their Cash App, and a lot of people use it almost, they deposit their checks in there. Not the folks that are making the millions of dollars, but the folks who are making less are using it almost as their bank. Do you see a good outlook for a name like Square?
It's so, I mean, it really is all about kind of diversifying and getting into that space where they're playing, where Venmo is, for example, that sort of thing, and maybe a little less reliant on things like food trucks and small businesses where you're actually handing over the card and doing that face-to-face work, where that's going to be a real struggle for the next couple months as we sort all this outbreak out.
But you see it existing in a few years. Like, you don't think it goes out of business. You think it gets, maybe it's just a sort of a standstill right now.
Yeah, I mean, I think looking too far ahead with any of this stuff right now is a little bit of a dicey proposition. But something like Square,
it's a takeover target.
I'm sorry?
Do you think it might be a takeover target for some of the other names like Visa or MasterCard or Google or anything like that? PayPal?
It could be. It's certainly a big enough brand, and there's certainly going to be demand for folks with online payments. So I would imagine that would at least be something that folks are thinking about.
You know, you made a good point about PayPal, and when I read through the notes, it talked about their business because people are at home, working from home, shopping from home. They're using a lot more PayPal, and that bodes well for PayPal. So that's the opposite story, where people aren't using as much Square, they're using more PayPal. Do you think the PayPal story continues? You know, even once people go back to work, that they continue to shop online or use PayPal plenty?
Well, what I do know is that there's going to be an awful lot of demand once this all sorts out. We've seen in the credit card space right now, we've seen some people who are using their cards a lot more simply because they have to make ends meet until that they get that next paycheck. But then you have some others who just don't have the opportunity to spend because they're not going to restaurants, they're not going to concerts, they're not buying airplane tickets. So I think that overall, the payment space is still going to be really strong. Obviously, it's going to depend on how quickly unemployment gets down to reasonable numbers. But I do think that those who are going to be financially stable once this outbreak ends are going to want to spend pretty quickly when they get out.
Yeah. Yeah. You know, Matt, as I was looking, by the way, just for the PayPal, for people who are interested, Citigroup has a PayPal price target at 145 with a buy rating. I see 152 from Keefe, Bruyette and Woods at Outperform. I saw another for 150. So it's around 145 now. So it's near where the price targets are set. What are some of the conversations that you and the LendingTree folks are having as, you know, really imperative in the next 6 to 8 weeks in the payment space or at LendingTree overall? What are you looking at most closely?
Well, the thing that we're trying to figure out is just how Americans are going to get through to that next paycheck, because we've seen in a survey that we just did that banks are closing credit card accounts. They are slashing credit limits. We saw this in the Great Recession a decade ago. We're not surprised that it's happening. Banks are kind of retreating into their shell a little bit and reducing available credit that's out there to minimize their own risk. But what's going to be interesting is to see just how high delinquencies raise in the credit card space before too long, and how people start to bump up against those lower credit limits and that sort of thing going forward. There's just so many variables out there that it's just a really tough time.
Right, when people start using credit cards for food or auto payments or things like that, it starts to become a little nerve-wracking when debt builds up. Matt, great conversation. Thank you, and we'll circle back and see what your findings are in 6 to 8 weeks. Matt Schulz, thank you, Chief Industry Analyst at LendingTree.